Hello and welcome back to Tackle Trading. I have found a really interesting trade setup on Kohls Corporation. Just stumbled across this on accident and saw the chart pattern and was absolutely thrilled with what I saw. Ticker symbol KSS, obviously Kohls being one of the big retailers. And this time of year we typically expect that Santa Claus rally heading into Christmas. It's kind of an annual rally for the market. Not always going to happen, but it's typical. And in anticipation of that, with this particular retailer's chart setup, we have a really good opportunity to take a trade. Now, what I see on this chart is that Kohls has been in an uptrend, and all of the retailers have been in an uptrend. If you look at the retail holders sector, or the holders exchange traded fund, or if you look at the retail sector, it's running really strong. It's doing relatively well. And a lot of the fundamental and economic data looks pretty good. But this particular chart example is really nice. First thing I see is an uptrend starting back at really third quarter. You're seeing August, September, October, November. And that's typical for retailers to rally during this time of year. And we see a really nice upward trend in price. Now, the last move on Kohls, it just ripped from 50 to 58. Now, that's an 8-point move. That's huge. And there was a ton of strength and energy and momentum in that move. There's also some pretty decent volume associated with the move. Now, we have what's called the retracement pattern, a bullish retracement pattern. And we see the price sell off after it reaches those highs. We see some profit taking, dropping prices back down towards 55. And one of the first things I see here is that price is traded back down to the old ceiling. The old price ceiling was about 54. And this is an old resistance point. And as you know, old price ceilings frequently tend to become new price floors. So back here, for example, we have the old price ceiling. And over here, it became the floor. And you can see the long lower shadow on the candle pattern here, indicative of some buying pressure coming in and some heavy volume associated with that move. And the following subsequent price action, it moves up because the old ceiling, the old price ceiling becomes the new price floor. Well, that's exactly where we are right now. We have the old price ceiling at 54. We have a pullback down into that zone, and we see a long lower shadow. This is a textbook candle pattern called a hammer. Some might look at that and say it's a dragonfly doji. It's kind of somewhere between those two, but it's a really good looking candlestick. We've got some pretty solid volume associated with it. And when you see high volume here, some of that's going to be accumulation, some of it's going to be distribution. And what I'm really going to be looking for is a price confirmation up. I want to see this change directions. And I'm going to take a real simple trade on this. What I am going to do is I am going to put a buy order above the candlestick high. I'm going to put in a pending buy order above that candlestick high. And I am going to put in a protective stop loss to protect my capital down below the candlestick low. And this stock typically can yield 5 points is a decent move for the stock. It averages somewhere between 3 to 5 points per swing between support and resistance pivots. And this is a really good timing mechanism, a very good setup. And I have an opportunity to buy this right around 55, just a little bit above that. And I'm going to, at a minimum, shoot for the last price ceiling and try and dump this off at 58. That would be a 3-point gain. And it could easily cover that distance in probably, I would say, 5 days, just to give you an idea of a typical swing. I'm going to start back here over at the left. And that swing, 1, 2, 3, 4, 5, 6 days, went from 48 to 51, a 3-point move. Here's a 3-point swing. We see from about 53.5, 1, 2, 3, 4, 5, 6, 7 days, went from 53.5 down to 50, a 3-point move. So a 3-point move, not uncommon. Here we are from 54 towards 57, might get to 58. I would probably say 5 to 7 days. And I'm going to go ahead and place this trade. So I'm going to go into my brokerage account here, and I'm going to click on the trade tab. Excuse me. I've got ticker symbol KSS, and I've already hit a buy order. I'm going to throw in 200 shares. I'm going to do a first triggers OCO bracket order, and I'm going to put in my sell orders in advance. And I'm going to crank those up to 200 shares apiece. Don't want to overdo that. Okay. And I am going to make these orders good till canceled. Now my first order is going to be a buy stop limit order. And I'm going to put it in just above that candlestick high. So what I'm going to be doing here is identifying the candlestick high for my confirmation, and the high is at 55.04. So I'm going to trigger into this as soon as it takes it out, and I'm going to go 55.00. Let's do lucky 7. So we're going to go with 55.07 for my trigger price. And I'm going to try and say I don't want to spend more than 55, say 15. I'm going to give it a little opportunity to get filled, a little 8-cent window to get filled. Now, what I'm saying to the computer here is to buy if it goes above 55.07, but don't spend more than 55.15. I'm now going to put in my sell order at my target, and my target is 58. So I'm going to say, hey, let's sell it when it gets to my price at 58 or higher, and that's going to be good till canceled. And now I'm going to put in my protective stop loss. The candlestick low is 54.05, and I'm going to drop that down below 54. I'm going to go put that at 53, say 97. I'll use the lucky 7 again. So 53.97. And I'm going to go ahead and hit confirm and send. And what I have here is a buy order for 200 shares of KSS. That's Kohls. I love that ticker symbol, by the way. And I am going to be dumping it if it hits 58 or higher. And I'm going to be dumping it if it hits 53.97 or lower. This is going to predetermine my risk and my reward. And I'm going to go ahead and just send that in. And I now have a pending order on that particular stock chart. So I'm going to go ahead and crack open a chart on that and just show you that I have this pending order on here. And let me crack it open here. Okay, there we go. What you see is my buy stop limit, my sell limit out here at resistance, and my sell stop loss in case I'm wrong and it continues to go down. This is a textbook bullish retracement pattern, and what I want you to notice here, is that I have a 2-to-1 reward to risk ratio. I'm just going to do a real quick measurement here for you to take a look at. I'm going to be risking approximately 1 candle range in exchange for the opportunity to capture that type of potential profit. And on a 200 share purchase, you're just shy of $600 minus commissions. And that could certainly give you some Christmas spending money heading into the holidays here. And hopefully we get to participate in that Santa Claus rally. Hope you've enjoyed this. I will see you next time. Thanks.